We start with Persistent Systems. The IT firm reported a 6% sequential increase in net profit for the quarter ended September. On a year-on-year basis, net profit surged over 23%, driven by the company's focus on AI-led services as well as the strategy. We spoke to the CEO, Sandeep Kalra, about the quarter gone by and his outlook on the second half. Listen into that conversation.
The quarter, as you rightly said, came in well. We had another good, strong revenue growth quarter, 18.4% year-on-year in dollar terms, 20% plus in rupee terms. And on a quarter-on-quarter basis, it was roughly about 5.3% in dollar terms. Now, this was led by our healthcare life sciences segment, followed by BFSI. We saw reasonably good growth in both the segments, followed by tech, which we are seeing a good revival. The EBIT for the quarter also came in healthy, a 22.8% year-on-year growth at 14%, which is flat quarter-on-quarter, despite the salary increase, which dings us by about 210 basis points. So we were able to overcome the negative effect of the wage hike that we had given effective July 1st. And for you and your viewers, we basically kept the timeline that we had for the wage hike. We did not defer the wage hikes as some other peers in our sector have done. So overall, broadly a good quarter. Good segmental growth across and good client growth across. Happy to answer any questions.
Yeah, I want to start off with the geographical areas because for you, both America and Europe did well. The belief was that for all companies, product companies, services companies, US will probably do materially better only after the November election verdict is out of the way, uncertainty is out of the way, clients will take calls on budget there. What's happening there? Because you seem to have done well.
So Neeraj, see, in the last several years, if you look at it, there have been many different phenomena. There was the COVID phenomena, there was the post-COVID, there was the fears of recession, now it is the US elections. So all we have to do is, and sincerely, we are a small company in a much bigger sector. All we have to see is where the customers' minds are at, what is it that they are looking at. If they are looking at revenue growth versus cost optimization versus saving from some areas, investing in places like AI and so on and so forth, we have to be able to work with them and we have to build in the capabilities that we have been, if you look at our AI capabilities, we have been investing in that, and that has held us in good stead. Good market, bad market, and so on. So we are reasonably confident that will be the case going ahead as well. We don't control the economy. We don't control what happens in the macro in the world, whether it is in APAC or wherever else, Middle East and so on. But we control our reaction, and so far as a team, we've done well with our customers and they've grown with us. And we hope that to continue.
Yeah, but even sectorally, so not US has done well, BFSI has done well. What is this? Is this a trending piece? Because most people were thinking that it will actually trend lower. So how do you look at BFSI and US combined? Because that will be a big driver, not just from your perspective, I'm saying, but for the sectoral perspective.
Yeah, from the sectoral perspective, look, we are seeing some amount of spend easen up. Yeah, the people are worried about the elections, but you know what? With whoever comes in, the markets have to continue, the people have to do their business. So we are definitely seeing some amount of uptick in terms of, people looking beyond the short term. And we have been a gainer of that. We have also been a gainer of cost optimization. We have been a gainer of vendor consolidation. And I do think, people who are investing in AI capabilities, etc., will continue to gain market share. So yes, there'll be a little bit of loosening in the shorter term, longer term, we'll see. But within that, people who are focused on their customers, on next generation technologies, services, which kind of add value to their customers, will keep growing.
Okay. Now, before I come to margins, a couple of other questions, Sandeep. One of them is on technology. I heard you mention in your opening remark that tech seems to have starting to perform, I think, what, 1% sequential growth. But the belief in the commentary that I've read from the analyst community is that the bottoming out process is underway. It'll probably bottom out in the next couple of quarters. Is there a dichotomy between what the street is understanding versus what you're thinking about?
No, so for us, if you look at it, we have been investing in our AI platform called Sasva. We have been evangelizing that with our tech customers. We've got very good traction on that. We are winning some good large deals, including in the quarter gone by. And we do believe, from what we see, the ramp up will happen over the next 2 to 3 quarters, big time in those. So we are expecting tech sector to kind of turn around for us. Because tech for us versus tech for our larger peers are two different things. We are in the heart of the engine. We are in product engineering. We are their extended teams for product development, maintenance, professional services, 9 yards. Whereas tech for our other peers means IT, into their CIO organization, and we are heavily focused on CTO, VP engineering, the business lines, and somewhat in the CIO organization. So we are confident that will turn around for us, and we'll see a secular growth across all the three segments.
But happens, I mean, bottoming out in quarter two, in the next couple of quarters, or already bottomed out, Sandeep?
It's kind of bottomed out. We should see, obviously December quarter is a furlough quarter. Some of the tech companies also have furloughs. But if you look at the overall thing from our vantage point, from our bookings, from our pipeline, I do think it has kind of bottomed out.
But furloughs, you reckon, are similar to what you've seen in the previous year?
So far, yes. But these things get firmed up towards November and December mid. So we'll let it flow. From what we see today, the discussions with our customers, we do believe they'll be in similar lines as the last year.
Okay. Operational metrics. Last couple of questions, Sandeep. Operational metrics, margins, no complaints there. The question only is, or the one thing is that maybe, are you hitting the sweetest spot on the utilization, and therefore would that need to change a little bit? Would you need to do more hirings? How would that process shape up?
Yeah, so right now we are roughly in the range of 84% plus. It will be in a band of plus minus 2%.
Okay.
Now, obviously, we will have to hire as we go along, as we keep, ramping up. But our hope is that as we are using more AI platform that we have, we need not necessarily have a linear increase in headcount with respect to our revenue increase. So from that perspective, we are trying to use the latest technologies that we are evangelizing to our customers to be operationally efficient, whether it's our own operation, whether it's our service delivery to our customers. And that's where, we believe there is scope, while we keep the utilization where it is, to have better margins as we go along, as we use more technology for service delivery.
Well, the last question, TCE was very solid. I believe in the commentary you mentioned that Q3 will actually see substantial deal flow as well. Can you talk a bit about the landscape and the nature of the deal wins now and anticipated?
So if you look at our historical, financials, we have been declaring all our wins or all our, bookings, whether it is renewals versus new. October, November, December, given the fact that 80% of our revenues are US based, October, November, December is the final quarter for the year for many companies. That's where a majority of our renewals happen. What I had said on the earnings call is we'll see a bulk of our renewals happen in this quarter. That will take the ACV up. Even if we were to do the same, amount in new wins as we did in the earlier quarters, an average of that, our overall ACV bookings will be higher given the nature or the seasonality of the booking quarter. And overall, the pipeline is healthy. That's all I would like to say, because otherwise I'll be giving forward-looking statements, which we don't.
But 14% QOQ growth and ramp up anticipated there too, I presume. Sandeep, just before we wrap up, anything that has happened which is of note and I haven't managed to figure that out and ask you? If there is something else that stood out for you in the quarter, please do tell us.
Yeah, so see, from various perspectives, if you look at it, our industry is at a very interesting cusp. On one side, people keep talking about the macro economic environment, the US elections. There's a much bigger pivot that is happening on the technology side. And that is basically the AI/Gen AI. And I would rather say the AI pivot at the Uber level. And we have been investing in that significantly more so in the last 6 quarters. That is helping us very well. We are seeing good traction based on our AI for tech platform called Sasva and our AI for business, platforms like Iora, Gen AI Hub, and so on. That, in my mind, for Persistent will be the growth story, very differentiated from the sector, and that should give us sustainable growth going ahead. So that's the only other thing that I'll add to the commentary.
Okay, well, that's the management of Persistent Systems telling us about how the quarter's gone by and what we can expect going forward.